Warren Buffett is known as one of the greatest investors of all time. His investing prowess has earned him the nickname the Oracle of Omaha. With a net worth of over $100 billion, he has become a household name, and his investment philosophy is widely revered by both experts and novice investors alike. However, despite Buffett's phenomenal track record, he has made some investment missteps that have hurt his portfolio over the years. In this article, we will take a deep dive into some of Buffett's investment mistakes, exploring the reasons why they happened, and the lessons investors can learn from them. What is Buffett's investment philosophy? Before we delve into Buffett's investment missteps, let's first understand his investment philosophy. Buffett believes in investing in businesses for the long term. He prefers companies that generate consistent cash flow, have a moat or competitive advantage, and are run by competent management teams. Buffett also believes in investing in companies that have a low debt-to-equity ratio and a history of increasing dividends. He looks for stocks that are undervalued by the market and can be purchased at a discount to their intrinsic value. Buffett is a firm believer in the power of compounding. Therefore, he looks for companies that reinvest their profits back into their businesses rather than distributing them as dividends. He likes to buy and hold stocks for the long term, allowing the power of compounding to work in his favor. The Coca-Cola debacle. Buffett is known for his love of food and beverage companies. He has often said that he drinks at least 5 cans of Coke every day. Therefore, it was not surprising when Buffett's investment firm, Berkshire Hathaway, bought a 7% stake in Coca-Cola in 1988. At the time, Coca-Cola was one of the most valuable and lucrative brands in the world. Buffett saw it as a stable and reliable investment that generated consistent cash flow. However, as the years went by, Coca-Cola's dominance began to erode. New competitors emerged, and consumer tastes shifted towards healthier options. Despite these challenges, Buffett remained loyal to Coca-Cola, refusing to sell his shares. He even defended the company's controversial decision to replace its CEO, saying, "I am 100% behind it. I think this will be a turning point for the company." However, over time, Buffett's faith in Coca-Cola was proven to be misplaced. The company's stock price stagnated, and his investment in the company yielded mediocre returns. Buffett himself later admitted that he should have sold his Coca-Cola shares when the company's fundamentals started to deteriorate. The lesson from Buffett's Coca-Cola mistake is that no matter how great a company is, it can falter over time. It is crucial to be willing to cut your losses and move on to better investment opportunities. The IBM fiasco. Buffett has been a long-time investor in IBM, with Berkshire Hathaway amassing a $13 billion stake in the company over time. Buffett has praised IBM for its competitive advantage, strong brand, and talented management team. However, as technology continued to evolve and disrupt traditional businesses, IBM struggled to keep up. The company's revenue growth stagnated, and its shares lost significant value. In 2013, Buffett acknowledged that he had overpaid for his IBM shares and reduced his stake in the company. The lesson from Buffett's IBM mistake is that investors should not be too wedded to a particular stock or industry if the company's underlying fundamentals are deteriorating. It is essential to be flexible and adapt one's investment strategy to changing market conditions. The Tesco disaster. Buffett has invested heavily in the retail industry over the years. One of his biggest retail investments was in Tesco, a UK-based supermarket chain with a global presence. In 2007, Berkshire Hathaway bought a 2.9% stake in Tesco, worth around $1.4 billion. At the time, Tesco was the largest retailer in the UK, and Buffett saw it as a stable and reliable investment. However, over time, Tesco's management made a series of strategic errors that led to declining sales and profits. The company's stock price plummeted, and Buffett incurred substantial losses. The Tesco debacle illustrates the importance of conducting thorough due diligence before investing in a company. Buffett's mistake was assuming that Tesco's management team would continue to make wise decisions, without taking into account the changing retail landscape and Tesco's competitive pressures. The Dexter shoe debacle. Buffett has often espoused the virtues of investing in a company's management team. However, his investment in Dexter Shoe, a Maine-based shoemaker, proved that even the most astute investors can make misjudgments. In 1993, Berkshire Hathaway acquired Dexter Shoe for $434 million in stock. Buffett saw Dexter Shoe as a well-managed company with loyal employees and a solid business model. However, shortly after the acquisition, Dexter Shoe's business began to falter due to intense competition from foreign manufacturers. Despite the company's declining fortunes, Buffett refused to sell his Dexter Shoe shares. He was reluctant to accept that he had made a mistake and clung to his investment, hoping that Dexter Shoe's management team would be able to turn things around. However, eventually, Buffett was forced to write down the value of his Dexter Shoe investment, losing over 90% of its value. The lesson from Buffett's Dexter Shoe disaster is that no matter how well managed a company is, it can still be vulnerable to external pressures. As an investor, it is important to be honest with oneself and not cling to investments that have little chance of recovery. The Flight Safety International fiasco. Buffett's investment in Flight Safety International, a provider of aviation training equipment and services, was a classic example of the dangers of not conducting proper due diligence. In 1996, Berkshire Hathaway purchased 91% of Flight Safety International stock for $1.5 billion. Buffett believed that the company had a strong competitive advantage and an excellent management team. However, he failed to take into account the company's significant debt load and its uncertain growth prospects. As a result, Flight Safety International's financial performance was lackluster, and Buffett was forced to write down the value of his investment. In hindsight, Buffett admitted that he had not done enough research into the company's prospects. The lesson from the Flight Safety International fiasco is that investors should always conduct thorough due diligence before investing in a company. Blindly relying on a company's reputation or management team can lead to disastrous results. In conclusion, Warren Buffett has made some investment missteps over the years, reminding us that even the best investors can make mistakes. However, Buffett's investment philosophy remains sound, and his track record of success is a testament to his disciplined and patient approach to investing. The lessons from Buffett's investment missteps are clear. Investors should not be too wedded to a particular stock or industry, conduct thorough due diligence before investing in a company, and be willing to cut their losses and move on to better investment opportunities. In the end, being a successful investor requires both discipline and humility. Discipline to stick to one's investment strategy, and humility to acknowledge that mistakes happen and learn from them. What do you think about Warren Buffett's missteps? Have you made bad investments? Comment below and let me know what you think. What other subjects would you like to learn about? Thank you for visiting Free Market Economy.